Hello and welcome to another edition of Real Talk. Thank you for joining me. Well, what two amazing weekends we've had in the market with the grand final coming up this weekend. We've had on average 1,100 properties for the last two Saturdays with a clearance rate of 72 and 76%. Quite amazing. There's been some very good property reports coming up in the market, which I thought I'd discuss with you. One was a BIS report on oversupply. Now, there's a lot of talk of oversupply, but they absolutely confirm that the oversupply is in the core of the city, which, of course, if you're a donut investor, you wouldn't go into. They're saying that that all of the developments of the larger properties has peaked in 2015 and 2016 for approvals and build, with them all being sold out by 2017. And interestingly enough, BIS have come out and said that we're in jeopardy of an undersupply once we've caught up with that. They're saying the current catch-up rate is there's demand of about 165,000 apartments to 214,000, and that's going to tip in 2017, with the bulk of them being in the inner city. Very interesting, because if we look at the donut, I would say almost 100% of my developers now are looking for smaller sites in the donut. So the oversupply, it will peak at 2017 or ebb after that actually, and we're going for smaller sites. What we don't want to be is in this oversupply, undersupply market, because if you look at 2013, there were all these articles about undersupply, where in 2016 now we're talking oversupply. If it finishes in a year's time, it's a really good result. Another article that came out was all of the international bubble cities. Melbourne didn't even rate. What a shame. Sydney did, however. Sydney definitely had a bubble market with 50% growth in the last 5 years. So it adds further weight to what I've said about the Melbourne market. It's a genuine demand. It's one of the world's most livable city. People want to come and live here, and having spent a week in Sydney on business last week in that traffic, my God, I thought I was going to die. I could have walked faster than what one taxi took me to a certain location. It was just ridiculous. Overall, the whole market internationally, commodities and share market, has actually been down, bubbling up and down in the last couple of weeks, but we've seen 1% growth worldwide in the last week, which is very reassuring. Nickel's gone crazy because the Philippines have closed all of their mines. I don't know if it's environmentally or work safe, but there's been a real surge in nickel. Oil's going up and down a lot at the moment, and the stock market has almost fully recovered from the glitch we had a couple of weeks ago. So once again, there's not a lot to report. Interest rates are staying stable. The investor market is just ticking along really, really nicely. We're still looking at the more boutiques, loving townhouses as well as a great option in the donut. Some really, really good, strong results coming out. Rents are just crazy at the moment. We're getting $20 and $30 a week rent more for properties than we promised when they were selling a year ago. So it's a very strong market and a good, safe place to be at the moment. Anyway, thank you for joining me. I'll sign off at that, and I'll look forward to speaking with you next week. Thank you so much.